Hello, family. What an amazing week that we had. Uh, if you were patient, you probably got the fruits from the charts. But if you rushed the process, also on the early days of the week, you probably got wrecked. But as always, as I say, mm, the most important thing that you need to do is be patient and let price do its will. You can only press the button of buy or sell once you're clear. Okay, I don't give signals, or I don't tell you to go and play around with your live account. No, all I'm doing is trying to teach you on how to you can read price with precision, and then from there you can make your own decision whether you are ready to invest. So don't trash anything. Some guys try to report my channel. I don't know why, because I don't think I'm competing with anyone. I'm just sharing education and my thoughts. So I believe they will have to do more so that we lose the account. But before we lose it, then if we are going to lose it, I will continue to bring out some crazier stuff like tonight or today, depending on where you are. You're going to learn something off these charts, which is going to really help you to master a few concepts here and there. Then from there you can decide on what to do with it. So hang around. I got you as always. So um, some people work 9 to 5, some day shift, some night shift, but I want you to be work all shifts. Get the title of the chief of the hustlers. Represent the hustlers by doing what is required when you still have time to do it. So it's very important for you to show up, because if you don't, then the end result of that. What you have before you, this is a weekly chart. The pair is here of DXY. So we said we wanted to see price open when it was down somewhere here. We said we want to see it open to 50% of this week, or a lower quadrant, what it did there. And then the other week bumped lower. What we had here was what? An order block. So last week expanded higher to the fair value gap order block, and then it rejected lower. So this coming week I want to see price down here and also down here. So those are my two objectives for this coming week. So in short, I'm bearish on DXY unless otherwise, so you don't need to worry. So what we had last week, we wanted to see price respect this fair value gap, but it did not do that. But as always, what do we say? If price never respects a higher time frame PDRA, use that as an inversion or inverse PDRA to send price to the other side. So price closed above here on Wednesday, opened low, went high on Tuesday, gapped higher on another Thursday, then gapped high and then started to roll down here. So Thursday tagged our higher time frame key level, and then we saw price lower. So we still have this balanced price range here. What I want to see this week's coming, or this coming week, I want to see this price give me something that I can work with by behaving like this. If it can gap lower, then this balance price range should help me go down. But you see, it doesn't have to work like that so that you are on the right side. But I'm watching this. Okay, I'm watching this. If price opens higher and we get support higher, this candle without a wick here can be a magnet to send price up there. But primarily on a higher time frame, I want to see price lower, because we have more liquidity now that we are coming from higher time frame key level. So this is it about a DXY. Yeah, I don't want to go to 4H, because the daily balance president should give us the side to which we are supposed to go. So Monday or Tuesday we can close below here and then go lower, or continue higher to target this candle without a wick up here. So but majorly I'm poised to look for lower prices on this pair, that is a DXY. So without much details here. This is super clear and clean. So when I'm not going below daily, it means you need to be patient and see how price reacts from this, because if you go to 4 hour, it will give you some other different story, which I don't want to. So I'm considering daily to study this daily balance price range, and you just relax and wait and see what price presents before you. We look at GBPUSD. So same case scenario here. Let's remove these drawings here. We go to a weekly chart. Remember, from a higher time frame, all along, if you've been watching, we had this SMT here, price respected this fair value gap, respected this one, respected this one. We remember we called this fair value gap here, price came down and then pumped high. We still have, I want you to look up here, we still have those relative equal highs up there. So price biased to go higher from these price levels here. So from this last week's price action, you see the previous week, remember we were here and I told you that we are setting this price higher from internal range liquidity to external range liquidity. So last week, see price took out the previous week high, then dropped lower, then they left what, a weekly fair value gap here. You see that? So we still have an internal PD array to an external PD array, that is internal in the form of fair value gap, external in the form of the sell side, the buy side liquidities and the relative equal highs up there. So still, as if dollar confirms the lower price, then from here we can set our foot to go higher. So what we have here now, we have, this is the current price action that we have here. So I want you to be careful. This is an NFP week. You need to be smart, right? So what I want to see is price open to this. If it can open and take out this low, the better. You see this short-term low here to what? To our weekly fair value gap, and then we can set our foot higher. So if it opens lower to go high, the better. If it doesn't, there's no harm in doing like so. So in the daily chart, this is what we have here, and I want to see price open low to go high. To go high, we have this side as our target and the other buy side liquidity zones. If we go to the 4-hour time frame, you can see that now in the 4-hour time frame we have a 4-hour FVG here. Want you to be keen here. So we have this 4-hour FVG, which you also need to consider before doing anything. You see that? Now there are two case scenarios: price coming down to this level here and then go high, or price is closing above here. If we can open and then close above there, that should be a valid order block for me now to support price higher. Did you see that? As simple as that sounds, that is what I'm looking for this coming week. Okay, so if it doesn't get down here, because we have the 4-hour FVG here, then that's okay. We can see price doing what? Going higher, and you can see we still have near liquidity which can target relative equal highs there. So, and remember, when EURUSD is taking the low here, I think this low here, this one failed, so we hit that as a SMT here. So we watch how price responds from here. If it opens high and then close above, body close above this series of down close candle, that should support higher prices to take out those relative equal highs there. If it decides to come down to the weekly fair value gap, so that takes out this short-term liquidity here, still okay, still okay. What it calls for is what? Patience. That is what is very important at the moment. You see that? So I want to talk about something here. So this is last week's price action. We had Monday, Tuesday, Wednesday, all the way expansion to Thursday. So when you see this low here, 6th of May, 22nd May on 600, when GBPUSD failed to take out this low here, EU actually, you realize that it took out that low there, so we hit that SMT. Okay, so we, as price opened to come lower all the way down to a key level, taking out this low here in EURUSD, GBP failed to, so we still have that higher time frame SMT. Price pumped higher, came back to the fair value gap there, and then took it higher, and then it consolidated on Friday. I expected higher prices from here to at least to this relative equal highs, but the price did not do that. So we watch this for our FVG here, and this sell side liquidity into our weekly key level. So it opens here to a key level, we will go higher, and the 4-hour FVG still will support higher prices when we take this low here. We don't need to rush, but rather just being patient and letting price do what it's supposed to do. Okay, so big in, don't buy here and you realize it's pumping lower to the weekly key level before going higher. So I've told you in 4H, the only way you can buy this market is by seeing price closing above this high here. Once it closes above here, then now from here you can expect this order block to support higher prices for these relative equal highs. But until it does that, you need to be extremely patient. Be patient. This is not time to lose an account. With all that is happening, this is not the time to lose your man if you're trading live. Be careful so that you don't get trapped in these markets and then you lose your accounts for those who have already gotten into their live accounts. That's it and done. Be patient. We'll look at EURUSD. I'm about to finish. Look at what we have here. This is a weekly chart on EURUSD. Want to just remind you that SMT was here with GBPUSD. If you look out at this market clearly, we still have more buy side liquidity. Have this zone here, we have this high, and all this is a low resistant liquidity run. So having that in mind, we still have this short-term high here, which can be our nearest draw on liquidity. So price taking out this low, pumped higher, fair value gap respected, pumped higher once more, fair value gap rebalanced there, immediate rebalance there, and then it pumped higher. So what you're seeing here is a good price action for this coming week. So why? Because this weekly fair value gap price came up, closed above it. The last down close candle here, what is that? That is an order block. So price opened extremely lower, the way it opened higher in DXY, and then rejected that. So higher prices to this key level there is very a probable target. Remember, it's all about probability, not certainty. I can't call the market with certainty, but we can use probable reasons to get our market to where we want it to go. If you go to the daily chart, very nice. So also remember, you see this is that order block from higher time frame, and this shaded region here is the fair value gap there. So price came down on Thursday, and then pumped higher. So look at this. What we have here is a good price action after respecting the down close candle from the fair value gap. Price on Monday, Tuesday, Wednesday, Thursday came back to our key level and our order block, and then rejected that. On Friday, we had price behave open lower to what? Order block, and then rejected that. So this high here is something that you should look into, because it's very amazing, very amazing. So you saw me share chat on this one on Thursday, and I did not close these trades, by the way. They are still running, so I left them and see how, but I reduced the risk by bringing some to break even and some small profit. So they are still hanging in there waiting for the market to open and see. I will share the charts once the market opens and once we know the result out of those trades. So they are still there on these buys. If you look at the 1 hour chart, so still more liquidity, you see that, yeah, relative equal highs there. Okay, now knowing that now I'm going higher, I want to share something that I told you that I will share on which fair value gaps, which order blocks are high probable when you are dealing with the time. Allow me to move this fair value gap here and also this order block. Now that we've known we are headed up, we can make our charts clean a bit as I explained that concept here. So yeah, remember I told you when GBPUSD failed to take that low, what happened? In EU, you can see it took out this low here. So we have a higher time frame liquidity run. So price was dropping all the way, and then taking out liquidity on Wednesday here, and then I expected on Thursday to continue higher, and even Friday. But Friday price actually, consolidated because we had a very heavy expansion on Thursday. Okay, now I want to zoom in like this and bring your attention to something I wanted to share tonight. So we have this range high here, and now we have a new range down here. Okay, so these two ranges is where price is in between here. Okay, now what made me go higher? Remember, number one, we have sell side liquidity purge by this candle here. Why did I decide to buy now on Wednesday and Thursday? I want you to be keen here. I want you to take your gun box or your fib and calibrate it into these settings here. Get 75, get 50, and get 20, 25. Those are the most important levels I want you to have in your gun box or your fib settings. Okay, now, so and then take it, drop it from this range high there to this range low here. All right, hope we are together. So we have this range high and our range low here. So after you drop that, now there's something I want you to study. I want you to study this chart clearly before I throw or shed some light here. So on these levels, on 25 level, 50 level, and 75 level, but more so when we are buying, I want you to consider the 25 and the 50 level. Why am I saying that? I want you to look closer to this chart here. Remember, this is EU 60 minutes, okay? At 25 and 50 level, I want you to see what we have here. What is that? We have a fair value gap. Okay, at what level? 25 level. Now, this fair value gap has come after liquidity sweep from a higher time frame. Remember, this down close candle here took out liquidity, an old low which GU failed to do so. So we have that crack in correlation. That is SMT. Now, after SMT and manipulation, we have price bumping higher and then repricing lower to what? You see the high of this candle and the low of this candle. We have that gap there. That is a BC, but CB and BC, those are fair value gaps. All right. So at 25 level, we have a fair value. This is a high probability fair value gap. This is where you're supposed to buy this. Inside here, anything that is happening, anytime it's coming back here, number of times Those are opportunities to buy. You did not get that, but you will. Okay, now that is the at 25 level of my range high and range low. Look closer here. At 50 level, what do we have here? We also have a fair value gap there. Now look at what is happening exactly at 50 level. What is this? Mean threshold, the 50% or CE of this gap here, BC. Price comes back, takes out liquidity there, and then expands her higher. What time is that? At 9. At 10, we had expansion higher, closing above this down close candle that took out liquidity. That is what? An order block there. All right. So at 25 and 50 level, those are the areas you are supposed to find key levels that are overlapping with price at those zones, and then from there you can buy 25 and below 50. From here now you can let price do what? Pump high. If price closes above this 75 level here and then comes back, I want you to look closer here. What do we have here? We also have another key level. What is that? That if price pumps higher there, we'll have an inversion fair value gap to support price to our relative equal highs there. Guys, did you see what I did there? If you did not see what I did, you should repeat this segment of price there and listen again until you understand what you're supposed to do. Okay, this range high and range low, I'm drawing that because we have already taken an old low, and remember your bias is bullish. You are not going to pick end ranges and draw that gun box or fib levels 25, 50 and 75. No. Number one, you have to know where price is headed to. Has price taken out liquidity? Yes. Has it tapped into higher time frame key level? Yes. Now from there, you can mark your range high and range low. Why I'm poised to have a higher probability of price coming up here is because we have this relative equal highs. You feel me? So this low can be rated once more. Again, price can decide to come down to take out and then go higher. But the better off if it doesn't and then opens higher to take out. Look at this one. If price can open higher and then close above here, you see this down close candles there? Yep, let me remove these drawings here. Very nice. You see this down close candles here. If price comes back and closes above there, then we don't need this low to be violated. This low should be a protected low to see price higher to this level there. And remember, we even have more, you see, buy side liquidity here. Okay, so last week set a pace on what we anticipate this coming week. But tonight, something I want you to take home is the key levels that overlaps with this 25 and 50 level and 75 level. Those are key levels that you have to take into consideration, and they are high probability key levels. Now, I know you are like, okay, why did I not see these things? And they have been here all along. There is more to learn. Go down and ask yourself, why am I using 25? Why 50? Why 75? No, why not 30, 60, 90? Why not those levels? Something that you can learn from your charts. But as time goes by, we can't give everything in a single day. You will make the lesson so boring, and I promise I don't want to take your time forever. So high probability fair value gaps overlapping with the 25, 50 and 75 level after a liquidity sweep into a key level, and the price has expanded, giving us a sign that we are now changing bias, or we are now in sync with our higher time frame direction of bias. Remember, if you cannot determine bias where price is likely to go with precision, then that is not a high probability trade. Look at that. They will now they will they will now spam it and report it at 1,000 times. But I don't care. I'm not gaining anything here, so if they take it, I'm still okay. Anyway, did you get that? Okay, I want to give you one last example. So on this side, I'm bullish on EU also to those buy side liquidity levels. But one thing you could take from here, how do I get those higher time frame? How do I get higher probability fair value gaps? That is what is happening here. Mark your levels like that. Get your range in sync with the higher time frame directional buyers and check out these levels here. You will be amazed. You'll come back and feel good about it. Okay, I want to give you one more example about the same concept. As I wind up, I really didn't want tonight to stretch your time watching these episodes. So you see what we have here. We have this fair value gap here. This is a gold. Remember, we did well after all these drops. We called this, remember, then now we are calling it higher. If you look at your weekly chart, yeah, remember when we were here, 50% of the gap lower to a key level. You see that? In fact, last week I did not even want it to drop this heavy down. I thought it could respect the upper side or upper quad of this order block, but still we're at 50% of this gap here. Right, take body to body, price actually is respecting the 50%. So don't be like, it's going lower. No, I don't think it's going lower. I think it's going higher to those levels up there. So weekly chart giving me internal range liquidity, external range liquidity. On the daily chart, very beautiful. Look at that. So we have the daily fair value gap here. Price comes back. Order block here. You see, are you seeing this? You see that? Price respecting that order block, then rejected high. So we have this high, we have this high, we have the other high there. So I'm bullish on this one, unless the only way I can invalidate my higher time frame bias is when price closes below here. Then I can think of taking it lower to this low here. Unless otherwise I'm very bullish on this. Okay, so this is the daily chart, and you can see prices, the bodies are no longer interested to close below this daily bullish fair value gap. We look at 1 hour chart. Very nice. I want to do the same thing that I did in EU again. Remember, I told you tonight I have to give you something good, something good, something that can, you can close the chart and be like, all right, I need to go back test this and see what happens. All right. So remember, this is our daily order block. This order block is doing what? Overlapping with a fair value gap here, 1 hour. You see that? Good. So what do we have here again? So we have taken liquidity. Can you see that? This one here. Okay. And to our key level, daily order block and 1 hour fair value gap there. You right? Okay. Want to open your eyes again once more again. How do we find high probability fair value gaps? Here we go. Do you see anything? Yes. I want you to put your eyes here. What do you see? Very clean, relative, equal eyes. I want to, yep, okay, that's okay. So those are relative equal highs there. I wanted to change the color of this. Yeah, okay, this one here. Yeah, right, and then we can, yeah, right. So so we have manipulation to higher time frame key level, order block, and fair value gap there. You see that? So price now we are starting to do what? To go high. I want you to open your eyes again once more. I want you to take this low here to be your range low. To be your range low, and you also have this high here to be your range high. Okay, so same case, the scenario that we did in EU. I want you to take your, so you see now, when is this? This is on Wednesday. Price is confirming the low of the week, and then Thursday we expect some expansion higher. How can we take advantage of Thursday's price action? To what level? Buy side, fair value gap, right? So you don't need to, you see, after taking out this and tagging this level, and then it started to move lower. But do you need to, this gold, all this is enough. You don't need to be there for so long. Don't overstay your welcome. But let me open your eyes again here. Let me remove these lines. Now you know what they are. I don't want to make my chart so that you see that. So we have this range high and this range low. Take your gun box or a fib level and drag it from the high to the low here. I know some of you now like, okay, where did this guy come from? You will learn these things, you will understand them, you don't have to pay anyone to teach you. Just show up, man. Alright? Okay, are we here? Oh, very nice. So we have, I'm trying to adjust here, right? Okay, that's it. So we have our level here. This is 25 level, 50 level, and then we have our 75 level there. Alright, so how could have we taken advantage of Thursday move? Now that we have confirmed 1 hour fair value gap, daily order block, you remember these levels down here, isn't it? So how can we take advantage of Thursday move to get something off these markets? Look at this one here. At 25 level, what do you see here? Fair value gap. At what time? 5. London session, right? Kill zone. Liquidity has been taken. Price has tagged higher time frame key level, daily order block, 1 hour fair value gap. Expansion higher, coming down to our kill zone. Then we have what? Half fair value. At what level? 25 level. Did you see that? Okay. Let's go higher. 50 level. We haven't taken this high yet. Okay, and we still have our key level here. But this high is enough here. Okay. So where are we? At 50, below 50 level. What do we have here? So price comes down to prices there, immediately balance. You see price, you see the high of this candle, price opens low, closes above there. The next candle opens here and then comes, there's immediate balance there. But that's not what I'm looking for. What do we have here? Hello, fair value gap. What did price do? And then your target there, you're out. Guys, from London, let me show you something. From London to New York, how many pips are those? I want to zoom you so that you can zoom in, zoom out. How many pips are this? Even if you went in with 0.001, I don't want to explain more about that. Okay, so that is that's massive, man. That's enough for you to do your own stuff. High probability fair value gaps, liquidity sweep to a key level, and then you have your new range high and range low. Then check out what key levels are overlapping at the 25 level, 50 level, and 75 level. If we could have gone higher, in fact, I thought from here we could have, see this is a key level price closing above here. Thought this down close candle here could have done what? Supported price higher from here. That was my ideal case scenario, but you see it's pumped low and then decided to go lower. But from here to here, those key levels, high probability go in without fear. If you are trading life, if you are demo and practicing, those are the things you should practice with, because they give you some clarity to work around with, and then you can support your buyers with other things that we've been studying. But the highest probability fair value gaps are these ones. At these levels here, you can equally get levels that can be very helpful at these key zones here. The only way you can trust these zones is by trying as much as you can to ensure there is logic that supports your key levels. Key levels are not key levels unless there is logic behind it. Okay, so logic only applies when you are in sync with the higher time frame buyers and you're trying to respect those key levels within time and then price. That's why I told you this key level that is overlapping with the 25 level, what time? London kill zone. The one that is supporting the 50 level, what time? At 10 New York, and then you take out your targets up there. As simple as it sounds like that, those are the key things that you need to go in and practice. You don't see one example and then you are satisfied that that is it. No, one example is not enough, but try to have a number of examples which you can help you to support your buyers and be able to execute in this market. So if you go to 4H, price actually came down. We still have more reasons to go high. If you start this price action here, you can see price went higher from this range high to this range low. Still, we after taking out this liquidity, price coming up, fair value gap, order block there, we want to see it continue higher. If it doesn't do that, we still have this liquidity, can decide to come low and then go high. But from there, all the time, once the key levels have been tagged, buy side or sell side has been taken out, you now have to be patient and wait and see whether now with your levels, the 25, 50 and 75, whether you can get key levels overlapping on those zones and then set price higher. So we have this daily fair value gap in gold, and I expect that from here I want to see price higher to take out this buy side liquidity. Guys, go down and back test those 25, 50 and 75 levels as you prepare for this coming week. And other pairs, that any pair that you see, you don't need to trade only these pairs. You can find your favorite pairs which you can actually be able to work with, not necessarily this one. So because these concepts work in all the pairs that you can come across. So ensure that you are able to execute using the same concept and using the same case scenarios. These levels are very important. If you take care of those levels and you see now, you know the logic. When are you supposed to draw your gun box or your FIP at 25 or at 50 and see which key levels are overlapping at that zone. Hopefully this will be helpful for the coming week. Be patient and execute only when logic and the price align, not pattern. Until next time, peace.